The battle against inflation is not only not finished, but it's certainly not a victory. The reality showed by the latest figures of inflation in the United States, but more importantly, core and super core inflation, show that the persistency of inflationary pressures is very severe, and more importantly, that the risk of higher degrees of inflation as government spending continues to rise and deficit spending, which is printing money, continues to be very elevated, those elements of risk remain. It is impossible to reduce inflation without reducing the monetary aggregates and without reducing the level of government spending and deficit spending, which is printing more money. So if we don't look at those factors, we may be very hopeful about things that are not really happening. And if we look at the next few months, we need to pay attention to the fact that, one, money supply growth may start to rise quite significantly. Number two, deficit spending continues to be very elevated. And number three, that the level of indebtedness in the economy rises as well. So those elements have to be taken into account in order to invest. And rate cuts, as the market is expecting right now, seem to be pretty optimistic. So we need to be very cautious about that path of rate cuts. It is very likely that it's going to be significantly shorter and certainly less relevant than what markets are currently anticipating. But money supply growth is the key factor to look at.